Well, Trish, it was stupid, it was painful, it accomplished nothing, and it cost a lot. Standard & Poor's economists estimate the 16-day shutdown took about $24 billion out of the economy. Now, that's not much in the context of a $16 trillion GDP, but you have to remember that $24 billion is lost one worker at a time. If you go to Bloomberg.com, there's an interesting, sad story on that today. It's all reflected in fourth quarter GDP. S&P took their forecast down from 3% to close to 2%. IHS going below that. We're waiting for others to weigh in. Much of that, of course, will come back in the first quarter. We hope federal workers get their back pay. Contract work will be made up. But look, what we got, an agreement to do this all again towards the end of the year, there's no reason to expect politicians will do anything right then. And even if there's no shutdown, we have to live with more uncertainty. Chris Vivaris of Macroeconomic Advisors ran some numbers. Since 2009, because of uncertainty over Washington policies, corporate borrowing costs are higher, growth is lower, unemployment's higher. We have almost 1 million fewer jobs, Trish, than we would have had.
You know, now that this is all over, I suppose we can get back to asking you, what about the Fed? Does this mean more sugar for the foreseeable future?
Well, we can talk about that, but probably not much to talk about yet. They meet again in 2 weeks. The damage to the economy likely takes them offline, keeps that sugar flowing, as you say. BlackRock and PIMCO are now telling their investors tapering will be delayed. The Fed may now have no choice but to stay longer in its intense policy experimental mode due to both the likelihood of weaker data and to a perceived need to take out insurance for the economy against future political dysfunction. That's PIMCO's Mohamed El-Arian writing yesterday after the shutdown deal was announced. You know,
speaking of data, Mike, are we ever going to see this jobs report? Remember that one that was delayed?
Yeah, the all-important September jobs report. We hope we get it before the all-important October jobs report. We don't know yet. Workers are just coming in this morning. A lot to catch up on, including that jobs number. Not as relevant now, perhaps, but one big question, what about the October report? This week is the week they should be doing the survey for unemployment. We'll see if the delay makes any difference for that. Goldman Sachs says they may want to do things as they did back in 95 and 96 when they released the reports on the same day of the week. Could put us in line for a jobs report tomorrow or next Friday.